We're on.
Or you turn them off or something.
The other phone section.
It might be maybe the lights over here.
No, I think it's down here.
Oh,
Got
There,
it.
you got them. Thank you.
We'll call the meeting to order, the April 30th financial review meeting of East Manchester Township, and we'll dispense with the formalities. So I would like to turn the meeting over to our accountant, Jennifer.
You mean Christie?
oh, it's okay. I'll go ahead.
Or, okay, our manager, Christie.
Okay, so today this is a quarterly review meeting to see the year-to-date expenses and revenues. We also check on our loan, interest, and money market account to ensure the township is on track for the 2026 budget year. And then, of course, we have a couple other things on the agenda for today, like just a quick review over the audit, and we're going to discuss about the per capita tax. So beginning with year-to-date total revenues is approximately 2.3 million, which is 44.5% what the township budgeted. We budgeted a little over $5 million in revenues. At this point in the year, that puts us on track with our revenue projections. Going to our expenses, 2026 expenses were budgeted at a little over 4.9 million, and year-to-date is, I'm sorry, 1.7. Yes, you're right. I have the wrong number written in here. Oh, boy. Yes, 1.7, a little over 1.7, which is 36.42%, and of the budget of what we budgeted. Being that we're already a month into the second quarter, expenditures are tracking appropriately and remain in line with our budget expectations. And then getting on to our initial principal loan, that balance was $950,001 with a current principal balance of $799,140.97. And I like to reiterate this for every time we talk about the loan, just so everybody understands and realizes what we did when we initiated this loan. Only interest was paid prior to the end of 2024, and then our principal payments kicked in, and so we were paying principal and interest payments at the beginning of 2025. And the purpose of the loan, just to remind everybody, was to allow the township to keep a 40% operating reserve in cash for an emergency event / natural disaster or other unforeseen major expense. And then getting to our money market account that the township opened for getting a lower loan interest rate, and that's where we put the loan directly into. That has earned $7,401 and some change so far this fiscal year. And then the interest paid thus far for 2026 is a little over $16,000. In the event of a disaster, the township would eventually receive reimbursement by the federal or state government, but it could take months or years. I just want to add that we could get reimbursed some of that money back, maybe sometimes all of it. We just hear bad things about PEMA and FEMA in regards to their funding. So, does anyone have any questions based off of what I already said?
I don't, no.
Okay. So the next thing here is, per the board's request from the last financial review meeting, you wanted to know what the number is for the 40% operating reserve. We based it off of our expenses that we budgeted for 2026, which is almost $5 million in expenses, which would take us to approximately $2 million to meet our 40% operating reserve. And then when we look at our unrestricted net assets, which was in surplus from last year, we have just under $4 million. So we're pretty much double what our operating reserve goal is. So one other thing that you asked for last month was to maybe come up with an analysis of how much extra to pay on the loan, or, maybe what else we could put in, into our capital reserve fund, which we didn't put anything into that yet. We didn't do that. We weren't sure exactly how to go about it, or if you even wanted to make that decision this month, until maybe we got to the budget time period. I know it's one of those things we kind of keep pushing off, but with the tax increase, we, want to just make sure we get in what we projected and everything. So it's up to you. I mean, we have double our operating reserve amount in unrestricted net assets. So I'm going to let you discuss and give us some kind of direction.
Could I say something? Can you guys hear me? I just wanted to say that I'm going to forget how I was going to say it. For the loan, I wanted to tell you guys, with all the money that Kathy's been bringing for the real estate taxes and what we've been getting for the earned income tax so far, we made a bunch of big transfers into our Pliget Prime account, which is where we get the highest interest rate right now. So on 4/8, we transferred $550,000. On 4/17, $100,000, and 4/28, we put $600,000 in. So Christy and I were talking about it, and Kathy was bringing me some big checks. But I told her, obviously, that's going to peter out towards the end here, after she collects most of it. So, but you can see by the thing here how much we've gotten already, which we've got 72% of the real estate tax at this point for what we budgeted. So we've got a good chunk of that right now. But I would still, in my opinion, I think you guys should still wait until later on in the year to make that decision, just so we can see where we are with our expenses by then.
Let's talk about that a little bit more. So just
Can you turn your mic on? Thank you.
Sorry, just turned it up. So we got about 1.8 million budget for real estate taxes, and we have almost $500,000 yet to go.
I didn't even hear. I'm sorry, Dina, I didn't hear. Couldn't
We
hear.
budgeted 1.8 million in real estate taxes.
Mm-hmm.
Like you said, we've got about 70% of it. It's almost 1.3 million.
Mm-hmm.
Gives us another $500,000 to go.
Yep.
Is that $500,000 at risk of not being collected? What's it comprised of? Because, like, I'll pick on my house, right? My taxes are escrowed. Right? So whenever those bills come due, it just goes.
I would have to go over and look at my sheet. Kathy, in the beginning,
Sorry.
I would have to look at my sheet. That Kathy gives me one for, the county sends one for the real estate with the assessment stuff. And then Kathy gives me one for the per capita, and she used to give me one for the fire hydrant as well to start out with for the year what should be collected.
Just focused on the remaining $500,000 in real estate.
Yeah.
Okay, because that's the big. Your point is that if that's at risk, okay, meaning there's a lower probability of getting it, then you need to understand why, because then that would support waiting. Because if I heard you correctly, Christy. I don't have the most recent balance sheet from you, but you said there's $4 million in unrestricted cash, and our reserve only needs to be $2 million.
Mm-hmm.
So that basically says there's $2 million that we could make the debt disappear tomorrow and still have $1 million of cash yet over the reserve.
Well,
Sorry.
The thing that I was trying to get at was, since we made all those transfers, the reason we got the loan in the first place was because we depleted some of the reserve that we had from before. So we got the loan for that. So now that we're getting this money in, we are transferring it right away because we want to make sure we're getting that as much interest on that. So I'd like that to build up more too. That's another reason I'd like you guys to wait.
And I appreciate that, but it's really hard, I think, to justify sitting on $2 million more and our loan balance is under $1 million. Simple math would say, take out the loan, interest goes away for this year. That's because we have some other unanticipated expenses that may pop up. I mean, just the loan and interest this year, what we budget for? Probably $30,000-$40,000. I'm just kind of guessing real quick. I know you don't necessarily have it at your fingertips.
Yeah.
But I think, I don't necessarily want to decide today, but I think I want you to think about those particular pieces because, again, unless there's something super unforeseen that's going to happen, we said the reason we did that is right, we depleted.
Yep.
We took out the loan to make sure we'd be sitting on that 40%, which is $2 million. But if we're sitting on unrestricted cash reserves of $4 million, why do we need double of what we said we want in our backyard?
Right.
And again, if we said, okay, let's just pay off the debt. Now we're sitting at $3 million, we're still $1 million above, and from an expense standpoint, we just eliminated the interest expense for the remainder of this year, which may be another $40,000. I don't know the exact number.
It was 47,000, a little over 47,000 for the year,
Okay,
yeah.
we've already made 4 months worth
Yeah.
of payments, so let's
Yeah.
just call it 35 for, bottom line, minimum, to be conservative, is 30 grand in interest savings, most likely. So that can help offset some other unforeseen things that may or may not pop up. But unless you come back and tell me, well, hey, Dean, that extra $1 million that would be left over after paying off the debt, that's gonna disappear because we had the XYZ bill show up.
Mhm.
Now, again, the reason for the $2 million was exactly what you stated. We were advised to do that, that if we got into natural disaster, some emergency situation, we all know, we're not getting reimbursed from any federal or state monies for months, maybe even a year or two, depending on what it is. And we figured that was a good number to have, based on all the advice we received from our solicitor. And it puts us in a good financial position that in the event of a natural disaster, and let's say, make it a number, let's say it costs $5 million to fix whatever it is, right? Well, that $2 million in cash helps seed stuff, but it also, with our reoccurring revenues from the taxes that we get, that would help us go out and secure some loan for some period of time. Wouldn't be great, but I just can't see sitting on $2 million more
Yeah,
right now.
yeah. Whatever you guys would like to do, but that's the numbers of it, you know, and
Can I ask a question? When is our next scheduled financial meeting?
July.
You know, that's probably a better time to look at it. We're halfway through the year. It firms stuff up more. I mean, as I look at that, you give them time too to answer that $500,000 real estate. Is that at risk? Again, you know, our favorite term is the bluebirds from any big transfers that come in.
Yeah.
If that would help. And from the standpoint of just our local earned income tax. I mean, that comes in kind of a normal cadence for the most part now.
Yeah, that's something that comes monthly.
Yeah, but I mean, that's kind of on track.
Oh, yeah, yes.
We're a third of the way through the year, so
Mhm.
we've got, what, 30% of our state fund. Because I'm looking for it. Yeah, we're almost a third of the way through, and that's tracking pretty nicely. So I think then the next financial meeting might be maybe a better time to make that decision. The only thing then is probably closer to $30,000 of interest, but you could run the numbers and say, hey, if we do that, because when is it? Is June or July? So
July. 16th, I think.
So we'd only have, probably would have made our July payment, or they do it the first of the month.
Yeah, it's the second, actually. I don't
Okay.
know why
So
that
by
is,
the
but.
time we have it, we would have been 7, we'd only have 5 months of
And
savings, but.
we'd have to call too and get some kind of a
Payoff
payoff amount
figure.
and everything too.
Okay.
For them guys to approve or whatever amount.
Oh, let me write that down.
Yeah.
That'd be good to have for that meeting if
Yeah,
it's.
it would be.
And I don't have a problem with that, because who knows what the next couple months hold, but it'd get us halfway through the year, and if we're kind of tracking that, hey, we're 50% of north of revenues, expenses are running under 50%, and that, and there's, again, no real unforeseen reason to sit on that extra cash.
Mm-hmm. Okay.
I agree. But I'm, you know, like you said, I feel more comfortable if we wait till July. While we're on the subject of extra revenue that we have. Shane's capital expenses for equipment, we did establish that, right? That's down
Yeah.
at 1,400,740. Capital expense, or is that building expenses?
No, that is not the same of what we were talking about. That's not the fund.
There's a separate fund we want to create.
Yeah.
Because that's the other piece, and I think that's probably better even decided at that July meeting, because let's just work the numbers we have now. Let's say we get to July, everything's looking good, we're still sitting on $4 million of unencumbered cash. Take $1 million and pay off the debt, got an extra $1 million left over. We always talked about building this capital expenditure fund for kind of a rainy day fund to go out and purposely set aside to purchase equipment when it's necessary. I could see taking that extra $1 million and maybe do a 50-50 split, seed it with $500,000.
Yeah. I mean, that would put us in a good position
Right.
for future purchases.
Well, and the whole thinking about that is by creating that capital expenditure fund, it's not just capital, it gives us flexibility that if something unforeseen comes up, and say one of your pickup trucks breaks down, right? And it's like, okay, and we didn't really budget for it, it's unforeseen, the motor blows, right, it's a big expenditure. Well, we could then go in, because we appropriated that money, and say, okay, now as the board, we agree that we're gonna go use X number of dollars, let's say it's $70K to replace it, and off it goes.
Sounds good to me. We'll wait until July.
And we could build that capital reserve over time, you know, based on your anticipation of, hey, the loader, the this, the that's coming up years out. So ideally, we build that fund to always be there to cover those big capital expenditures.
And I agree with Jen, it would give us a little bit more time to see into the future a little bit more where we're gonna be at, because it's,
There's always, I'm always like that. There's always unforeseen things that could happen, and I'm just always looking at the expenses too. You know, and that's going to offset what we have eventually. So
You're doing the right thing. The worst thing we could do is too quickly pay off that debt, which is why we didn't.
I
trigger
agree.
for
I
last
agree
year,
with you. Yep.
and kind of get through, and I don't have a problem waiting till July to do that.
Okay. Okay, so the next thing I was going to say is when the next quarterly review meeting is scheduled for, which is July 16th at 2. And then I will write a list, you know, of what you're going to want to see for that meeting. So far I have the obvious, which is payoff, what's the payoff amount for the loan? And as always, you want the 2026 year-to-date financials. So in that case, that'll be the second quarter, the end of the second quarter. And so I will jump right into the next item on the agenda, which is the 2025 financial statement audit. So this audit has been completed, and there were no material changes resulting from the audit adjustments that we were talking about at last month, or the last financial review meeting. and no material findings were identified. So overall, the audit results were consistent with our expectations, and we did good. We always get complimented for how organized we are and how on top of everything we are, so we're doing a good job over here. Do you have any questions on the financial statement audit?
I do. No one else does.
Go ahead.
On page 21 of the financial statements, it says that there's 3 new reporting requirements, 2 in 26 and 1 in 27. So, let's see here. One of them's, what is it, statement number 103, financial reporting model improvements.
Yeah, we'll go to it together.
It's definitely on page 21. So, sorry, 102 was about was coming up, certain risk disclosures. Seems like we're disclosing anything, so we actually adopted that in the 25, so we've got that covered, right? Unless I'm mixing myself up.
What's your question? I'm sorry, I'm not understanding.
I'm sorry, when I read this, because on this page, they mentioned that there's 3 new report requirements, 2 that we have to be in for 26, and 1 for 27. So it's under it's under the pending governmental
Oh, it's under here.
pronouncements.
What
one is
paragraph?
Statement 103, and then there's 104, certain capital.
Oh, I
assets,
see.
104, right?
Yeah.
And then 105 is subsequent events. So I look at those, the 2 that are in for this year, 103 about financial reporting models. Okay, and it says the township is required to adopt it. I don't know all the details of it. Was anything discussed about that? Was there anything substantial that we had to change that we're doing? My knee-jerk reaction is, I don't sense there is. We're probably already doing what we need to do.
I'll have to defer
The
to you.
GASB is the Governmental Accounting Standards Board,
Yep.
and the auditors use that as the guidelines when they do the audit.
Yep.
I believe this is some of the things that are included when they do like their exit thing.
The exit
You know how they always
interview.
ask us those
Yeah.
questions? It's more or less just like, they never call it that, number 103, number 104, whatever. But they ask us questions that have to do with each one of these things. And then, you know, we don't necessarily know which one they're talking about.
So you're asking, do we have to do
I
anything?
just wanted to
Yeah.
know, because they say, hey, these are coming, 2 of them we have to do this year. And I didn't go and research the.
Yeah, I
the
might be
statements,
wrong,
just-
but
just looking.
I know
can-
that they use the GASB, and Wes always talks about the
So,
GASB
well,
stuff.
GASB,
and
like
he
you said,
explains
it's
certain
governmental
things to me.
accounting standards. We are a government entity.
Yep.
We use a modified cash basis, so we're not accrual accounting, okay? All that basically means is we do cash, okay, with some modification because we do put liabilities and stuff on the balance sheet. When I look at these, again, I did not go in and crack open statement 103 and 104, but just reading what's here in the financial statements, while we have to adopt them, my take is that I don't think we need to change anything, and so my question was, do we have to change anything? And it sounds like, if they're based on your exit interview questions that they provided, nothing came up in those discussions like, hey, you need to get ready to do X, Y, or Z.
Yeah, he never mentioned anything like number
Okay.
103, number 104, or anything, so.
And 105, subsequent events, and to me, subsequent events, I mean, just simple. That means, hey, our year-end audits through December 31st of 25, they're wrapping up their audit review in March or April, and hey, you went out and, you know, bought a $3 million, or incurred a $3 million liability for something.
Yeah.
That's a subsequent event. I don't see anything substantial there either, but that's for 27. So mostly it's just a function of, wanted to make sure we're good. we didn't need to do anything.
I can email
Yeah.
Wes, the auditor, and ask him about these
Yeah,
and give you an answer then.
Yeah, just mostly a
Just to
function
make
of,
sure.
do we need to change anything? If we're
Mhm.
doing everything we need to do, then
Yeah.
we're good. That's really the only questions I had on it, but otherwise, great work, guys.
Thank you.
Yeah, good work.
They said good work.
Yeah, good work when the
Oh.
auditors, you know,
Yeah, they're getting used to our system now, since we've had them for a couple, I think this is our second contract with them, so they're getting used to how we do our stuff, and then we're getting used to how they do theirs, and what
When
they
does that
expect and
contract-
things like that,
When
so.
does that contract expire?
I think we have one more year,
Yeah, I believe
and it
you're
would
right.
be for 26. Yeah.
Because I thought when we did this and renewed, there was a concern about less and less firms.
There were, yeah.
Yes.
Okay, so is that still?
I don't know, but we can look into that. Yeah.
I realize that'll come up in budgeting time,
Mhm.
but just something to be aware of.
Thankfully, since he already gave us our, quote ahead of time. We already know what we're going to be paying for 2026, but in 2027, we're going to have to start figuring out what that is. I think that's one of those things that I have on our future list of things to not forget about that I had created.
Well, it's a risk item,
Yeah.
because if there's less and less firms doing it, and we can't find one, then what?
Yeah, I hope that's not the
So,
case.
I mean, we'll cross that bridge. if we need to.
Yeah.
No problem.
Right. Okay, is there anything else on that?
None for me.
Okay. I'm going to get into the per capita stuff. So I remember a resident had said something earlier in the year, it could have even been towards the end of last year, at one of our public meetings, that he'd like for us to consider eliminating the per capita tax. And so Kathy Emswaller and I, got together and, she created this analysis that I gave to all of you. And then I went and used your favorite thing in the whole wide world, Dean, AI, to come up with a pros and cons list that's not perfect. And I acknowledge that, but it is helpful. So we're not taking that at face value. It's just a helpful item is all. So a major factor, though, even after her and I did all of that, in determining if you want to eliminate the per capita tax or if it's feasible, is Attorney Miller then said, well, the Local Tax Enabling Act, which puts a cap on a number of taxes such as the income tax, per capita, and local services tax, that statute then has a provision that says if two tax authorities levy the same tax, like for instance the school district and the township, each levy a $10 per capita tax, which we share, it's $5 each, then the tax will be halved for each, so for long as both collect it, and we both do. If one of them stops collecting it, then the tax is automatically reinstated to the full amount for the next tax year. And so that would be, so if we eliminated it, the school district would then take the full amount from us, okay? And essentially, what this chalks up to is our residents wouldn't save any money, and we would lose the amount of money that we are currently, collecting. Kathy would still be collecting it. So it doesn't really get rid of any administrative work and it doesn't go away. So,
By us getting rid of the per capita tax, doesn't save the taxpayers anything.
correct.
Then the school will turn around and take our half.
they
Correct.
need the benefit.
Yeah.
So I don't think we should get rid of
Well, let's just break that down. So, we just had my per capita tax bill,
Mm-hmm.
paid the the discount, there you go, $4.90. That piece of paper came out. I don't see a per capita from the school, it's buried in something else. It must be being collected through, my mortgage or something like that, because I'm not getting a second piece of paper.
I wish I knew how to explain that because I don't know the logistics, but what I can tell you is that Kathy does have a harder time collecting our portion of the per capita tax because most of the time that's the tax that goes to G.H. Harris, which is the delinquent, you know, what are they
They do
called?
The $4,
they
so
collect the
the-
delinquent
the-
fire hydrant and per capita
Yeah.
taxes
$4
for us.
and, or $5 thing. okay,
That's-
which has a discount.
right.
That's the one she has the hardest time collecting.
Yes,
Right.
yeah.
And so, while you're right, doesn't necessarily save the taxpayer, the school would jump in and do their magic. From my standpoint, it's kind of out of sight, out of mind, and the economics are one where it's like, why? Really? I mean, let the school have it, you know, if that's what they choose to do, or it automatically happens.
I believe it automatically
And
happens,
let them
yeah.
continue to go, and we make it known that, hey, we got rid of it from the township perspective. Education, just the economics. I mean, yes, ultimately we do get something, but given the fact that it's harder to collect, and I get the pros and cons that are here, it's helpful. It's like, well, okay, it levies something on everybody, whether they own property or not. Well, that's like an ant to
Yeah.
a mountain, you know?
I would rather explain to our constituents that we did consider eliminating it, and after some analysis, we found that it would not save our taxpayers any money. It would just, our share would go directly to the school.
Okay.
So,
Well, why don't we ask see who shows up at the next meeting and ask what their opinions are? What do they want to do?
You know, I was thinking a lot about this and I was like, oh, well, maybe that would help them not raise the school taxes, but let's all be real here. That's not going to happen.
Well, it's only,
I mean, look
it's
at
only about $20,000 we're
so-
talking about
Right.
here, so.
And we budgeted out of that, what did we budget? 22? Yeah, 22.
Yeah. Mhm.
So 22,000 is a rounding error in our budget and the school budget.
Mm-hmm.
It's not going to move the needle. I don't have an issue with going either direction, in all honesty. I would just ask folks, you know, they raised it, would you consider it? And much like, you know, what I'm saying is, I've only seen the one that gets sent to me for $5.
Mm-hmm.
If the school's tagging me, I'm not seeing that, and it's probably all wrapped in because of my mortgage with things being escrowed.
Yeah.
Can you check and find out, either with Kathy or finance person for school?
Why is the per capita tax for the
Yeah.
school not blatantly
Yeah,
seen by the
where-
residents? Yeah.
every penny counts.
Yep.
And I think if most residents would understand that if we eliminated the per capita tax, there's $10 tax. We get 5, the school gets 5. If we eliminate our 5, that 5 goes to the school because they still collect $10 then.
Yep.
And I think most of them would say, no, put it in the roads and the stuff like that because school's school, and that's the way I feel.
Yeah.
I don't know how, if you remember back when they passed the casino bill, that first year, my school taxes were reduced 286 or 268. That was only 1 year. The following year, the school upped their taxes.
Yeah.
So it didn't save me but 1 year.
Yep.
One's better than none. But the points are well made. I mean, you know, my sense would be is I'd make it disappear. I'd get the other side of the argument. But on the other hand, it'd be nice to hear some feedback from the residents who want us to eliminate it. And the reality of it is what you point out, Dave, is, well, yeah, we would eliminate it from our side of the ledger. The school district will pick it up on their side. So from your perspective, you know, out of sight, out of mind type of deal, like me with those folks that don't have their taxes escrowed or don't have a mortgage, then it's gonna show up at your doorstep, and instead of writing 2 checks, you write 1.
Who all pays per capita?
Adults, it's
Anyone?
18, mm-hmm,
Okay.
yep.
And that's
And
part of
have
the
an
problem
address.
too, that she has problems sometimes collecting all of it. Because sometimes, like, if somebody has a property and they have like tenants there or whatever, we have like a tenant registration or whatever that they're supposed to fill out and send to us so we can send it to her so they know,
You
she
weren't
knows that
supposed
there's new people there that need to be billed or whatever for it, but
Keyword is supposed to.
yes, so that's part of the reason, like Christy was saying, that's some of that always goes to delinquents for that, because of that.
Let's put our feelers out. Yeah.
Is there anything else on per capita? Okay.
Just out of curiosity, timeline, if we wanted to make it disappear for next year,
You would have to do it
Too late?
before December 1st.
before December 1st.
Yeah, like, I mean, you'd have to make the decision in November's Board of Supervisors meeting, because I would have to advertise it. Oh, wait, no, that's not even right. We would have to have it advertised for November's meeting.
October meeting, we have to decide.
Yeah, you'd have to decide at the budget meeting.
Yes.
Yeah,
So just kind of timeline as to
Yeah,
where we're
that's a
headed
good
to
point.
If we want to, that's all.
okay.
Thanks.
We can also just get that around again for the high supervisors.
Mm-hmm.
Sure.
What did we pay out to, just round numbers, for, the firefighters?
For the fire companies,
Their stuff. Yeah,
About the
what was that?
thousand?
we give them 350,000 and that's split.
No.
Or
You're talking about,
I'm
you're talking about the
talking
tax relief?
Yeah, the tax relief.
Oh,
volunteer tax relief?
That's not very much.
I
Couple
don't think so.
thousand, if that.
Yeah,
I don't even-
I'd
yeah.
have to
It's
pull that
definitely
up.
$5,000.
I don't even
Yeah.
think it was that much,
Yeah.
$1,000.
I've
It was
forgotten what
in,
that amount was.
yeah.
I'm pulling it up.
It's small.
Yeah, okay.
I definitely know it was less than 5K.
Answer Darrell's original question. Total amount that we give to the volunteer fire companies.
350,000.
350.
Per company.
No.
350 and
Split.
Total.
Yeah, that's, you split that, yep,
And then we've been paying that quarterly to them,
Okay.
so.
yep. Oh, that's not the one.
We didn't approve
That's more like a, if only if you were really altering it, it's not like a requirement.
This is really a work session. That's
Yeah,
Um,
yeah.
Do we want to talk about some of the questions that came back?
That's up to you.
Which ones do you want to talk about?
Well, the questions I asked about
On the order.
before.
The transfer of unencumbered funds.
Yes.
Well, they're answered, aren't they?
They are answered. Of course. So, what is it, page 17 of what you provided? So one of the questions I ask is, at the end of every year, we go through the machinations of moving budget dollars, underspent line items, to line items that are overspent in the general fund. And so for me, I'm like, I wanted to know why. And the answer that came back, I disagree with. Because.
Did you see this?
Yeah, I read
Okay,
it. I read
okay.
through it. Yep, thank you, Jen.
All right.
And the reason why is, in all my years of budgeting, I never went back through and said, oh, we're over here, under there, I'm gonna move it around to make it look better. To me, in reading through what you provided, what the auditors wrote back, the statute about budgeting, it's the general fund. So budget $5 million in the general fund. If I don't go north of that $5 million, those individual line items to me, that was my best guess when we put the budget together. Moving them around to cover shortages in other line items doesn't add any value. Because I've already got the actual dollars we spent. When we're planning for our next budget cycle, we are using, what is it, Jen, like 3 or 4 years of historical information now that we're going in and saying, do we need more money? Do we need less money based on where we're at? So to me, it's just an unnecessary exercise. Where we do need to do something is, okay, we budgeted $5 million in the general fund. We spent 5.1 million. I need to find $100,000 of appropriated monies in some other fund and move that over. That's a different, game there, a different outcome, because definitely overspending that fund.
I don't know, I've been working here since 2007, and that's just how we've always been told to do it by the auditors and things. So I just continued to do it the way they said. It doesn't matter to me either way, to tell you the truth. I gave you guys all this list of pros and cons, to let you guys get some information and see what you guys thought.
No, I appreciate it all. I think it's all very good stuff. I've read through what you provided. The end result for me is it's an unnecessary exercise.
However, if I'm reading this correctly, Dean, it says
Okay.
the auditor's response, we recommend funds be reallocated year-end to maintain compliance. That just demonstrates fiscal responsibility and oversight. So if that's what you're in disagreement with, I would rather keep no disrespect, I'd rather keep our auditors happy right now with what we're doing. So it may be an unnecessary thing, but they seem to like it. So.
And I appreciate that. I would just say that I think part of it is the definition, and that's why I asked those define, because program versus fund. It's like, is program at the general ledger level? If they were going back and saying it, because the fund is very clear, general fund, the fire, whatever it is fund, and the rec fund, and those funds are very clear to me. That's at the highest level. Underneath that, though, what do they mean by, they use the term program level, right, Jen?
Yes.
And so if they're saying, well, program, like all your labor is a program, all your office supplies is a program, I could probably, embrace that. But down at the general ledger level, when we sat and did the budget, it's like, doesn't add value to me.
They, the auditors always use terms like that, and a lot of times they don't pertain to us. In my opinion, the program doesn't, that word doesn't really apply to us in our audit, because we don't have, yes, we kind of have separate departments, but we would never have auditors come in and just audit one department or one particular project that we were doing. That's what they mean by the program level, which, like I said, that doesn't pertain to us, because we're never going to have an audit at the program level. So, and I had to look it up too, because I didn't know what it meant either. But Christy can attest to this. They're always, a lot of times if we email Nick, the other auditor, he comes back and he thinks he's answering our questions, and we have no idea what he's talking about a lot of times.
He reminds us of Attorney Miller.
So, oh yeah.
He doesn't really answer.
So, and we have to ask for more clarification then.
I get the history. I understand. I'm just telling you right now that I'm sticking on my side of the fence on this one. And wherever we land, ultimately, it's a group decision.
And well, also another thing, since we changed the way the budget looks now too, Dean's right, it is just the actuals on there. The budget line items or the budgets don't show for each one like it did before in the old one. Remember, we had like 3 years worth, and it showed both or whatever. This one, it's just like 25 and 26.
And so the reason I say it doesn't add any value is, for me, keeping the budget numbers where they always were, there's a learning there. Like for 3 years, it's like, gosh, for 3 years we've always underestimated this or overestimated it.
Mm-hmm.
That's important information. Once you make that adjustment, that history is essentially gone. And so that's what sticks out at me. But again, I've said my piece. I know where I reside with it.
But is it really gone? That history, we have that history.
We have that history, but it's lost in ultimately, once we make that move, that becomes the updated documentation. And if we bring back, which I don't have a problem, if you wanna bring back showing, hey, here's actuals and here's our historical budget numbers, whether they're adjusted or not, all I'm saying is, for me, I don't care what we budgeted last year, I don't care what we budgeted 3 years ago. What I wanna know is what we really spent. I want to see the actuals. And that's what, everything that I've done in my years of budgeting, that's what I base it on. If I wanted to learn anything from the prior budget numbers is, oh wow, much like I said, I've been getting this one wrong for the past 2 or 3 years. Why am I getting it wrong? Oh, my formula's wrong. My assumption was wrong here. We're not spending, 10,000, we're spending 30,000 or something like that.
Correct me if I'm wrong, though, I don't know as much as you guys know about this, but we do that every October. We go through that exercise, where we're high, where we're low, where we need to adjust, so.
Yeah.
And this sentence in here says showing unfavorable variances, it leads to questions about the proper oversight of legally adopted budget, which I think we do very well in October, so.
Well, remember, what I'm talking about though is it the December meeting that we do that at? Where we're like, the year's almost over,
And you guys
we're
actually.
50,000 over here, we're 50,000 short there, so I'm gonna take 50,000 from account A, budget-wise, and I'm gonna move it over into account B,
Yes.
and it's like,
And it is your biggest pain in the butt.
Sometimes it is, yeah.
Yeah.
I have a template set up now with the majority. Usually there's not that many, but
Game
we did
show.
have more because of, with the building,
this guy,
because
right?
moving stuff all,
Just-
all the
just call me
expenses
out,
we
Jim,
had.
just call me
We had to take a lot out of that capital account line item. So the majority of those were just out of the capital expense or the capital purchases line item, so.
I don't think we need to make a decision about it today. Certainly bring it up at, when we get back into the budget session and ask ourselves a question at that point in time.
Okay.
All right, I think the other items that I had in here, I didn't really,
Yeah, anything else on that list? He kind of answered everything else. You seemed all right with the rest of the answers there. Okay. Well then, I don't think I have anything else unless any of you have something else to say. Or Jen, Shane, do you have anything? Shane, you didn't get to talk at all this whole meeting. What do you want to say, buddy?
I was ready to ask Shane, I said, year to date, you're okay, your projections look good for your budget, for everything?
Yeah, traffic signal probably gonna go over this year, but yeah, that'd be the only one.
Yeah, that looks like the only one when him and I were going over it, so.
And that's
For the
because,
traffic lights.
because of maintenance on traffic lights, we're having problems with traffic lights? or-
Correct, yeah, the spring maintenance, contracted invoices came out, and I'm at 10,353 on that, and it's gonna be close, but it leaves like a couple $100 in there, but something else has to go on with one of these lights
Yeah.
for the rest of the year, so,
Yeah,
yeah.
sure.
so.
Shane, when does that get bid again? There's that'll get rebid soon, right? Is that at the end of this year for next year or something like that?
Yes, it's going to be, yes, she started early, it's gonna be for 27.
Okay,
It'll
yep,
be bid this year for 27, yeah.
okay. For 2027. Okay, I mean, and Jen and I went down, our year-to-date that we gave to you, and I was just highlighting things that, are over our, how we're already 1 month into the second quarter. There are things that are, more than that percentage, so we're like over half, of a account line item for some things. And it's the obvious things like professional services. We've been doing a lot with meetings, for instance, and we already knew about computer maintenance because we were discussing that at last meeting, and we'll discuss that again at the May meeting. There's some things that look like they're going to go over, but are actually done. You pay most of that account line at the beginning of the year, so it just looks like it.
Like he said,
Right, the dues and
Dues and
subscriptions and things
yes.
like that, yeah.
And workers' comp as well, too, is another one. Well, you didn't get to that yet, but
Yeah,
that was the other one I wanted to say.
like we already are aware that our meetings and classes and conferences is close and we still have major things that we're gonna be dealing with, but if it goes over, it'll go over a little bit. But we're watching that now, and that, to be honest, that happened because of somebody's confined space training that used to be free is not free anymore. It's actually gotten really expensive and we couldn't have, we didn't know that was gonna happen. So, but otherwise, legal services, we're already at 80% of that account line. Some of our, utility items are significant. Gas, we're at 90% already, so that's gonna go over a lot.
Well, I guess the big question is, when we put all those things together, and we've got almost $5 million in expenses.
Mm-hmm.
Are we going to break the $5 million in expense plan this year?
Well, I like to think that staff is really good at watching even the line items that we can control more. And we've been doing that every year. We like to think we're pretty good at that. I'm not saying we're perfect or anything, and there's things that you need,
But right now where you're at, it's like, what you're telling me is, no, I think we're okay.
Yeah.
In July, we'll be halfway through the year, and so let's take fuel.
Right.
No one, when we put the budget together, thought we'd be paying, what are you paying for diesel now, north of $6 a gallon?
Yeah, but ours is,
Yours is lower, but,
yeah, ours is bid
It's-
at the
yeah,
beginning of
it's
the
set.
year though, so ours
Mhm.
didn't move because of this thing.
okay.
That makes sense.
So then what's driving it then, if we're over in fuel expenses?
Winter,
Yep, snowstorms.
Oh, the storm, just out more.
Mhm.
gallons
expected.
used.
Okay. Gotcha.
yeah, it has nothing to do with the expenses, it's the, yeah,
It's the usage of it.
the
Gotcha.
winter, yes.
So you lock in your fuel rates. Gotcha, okay.
With the, that's on state contract.
Okay.
Is that the Coast Stars? Is that Coast Stars too?
No, it's not really, cause it's bid by state.
Oh,
I think it's on by state.
so it's something different.
So
We're
I think-
piggybacking on it.
So I guess where I get to, Christie, is, come the July meeting, it's like in line items where, hey, I told you we were over, guess what? We've gone much further over. It'd really be that look at, okay, where are we under? Are we
Mhm.
gonna break through our budget expenses? Because then that's, to me, based on what we were previously talking about. If we're going north of 5, that's a problem.
Right.
Because we didn't appropriate those funds.
Correct.
Okay, and then we go, well, where else do we have funds that are appropriated that we could potentially reallocate?
Mm-hmm.
Okay, or then I think there's another path where you have to go and kind of do a re-budget piece or a budget adjustment. But I don't know all the details of that.
So, yes, and we can do that then, but yes, we are watching this. Every month that Jen issues one of these for your board books too, we're all looking at them and watching them just as much as you guys are, I'm sure. And,
Yeah, those
or if not
reports
more.
show all of that
Mhm.
stuff on it. Like you can see the change. It has the current month on it. It has the year to date, and then it has the percentage for the year, and then it also has the whether we're under or over, and that depends on revenues or if it's a revenue or expense, whether it's red or black.
Yeah. And then just to briefly state that some of these items also look like they're very far over, but it's because we usually get some kind of dividend that makes up the difference. We just didn't get them yet is all.
Yeah, that's
So, or
workers' comp
state
is
aid
one of
or,
those.
yeah. So, otherwise, that's that unless any one of you have specific questions about any one of those line items, I'll take them now, those questions. Okay.
This is the, insurance. We like half red, but only 1/4.
What's the line item?
1,409, 350.
140?
409,350.
Oh.
Yeah, that's, the only reason that's so high, Daryl, I can answer this question. We've spent like 15,000 now. I believe that's gonna be the end of that, even though it only says 50%. And the reason we raised that was because depending on how these last few years, and it's like that with the payroll as well, the way that these bills and stuff are going at the end of the year and the direct deposit, we ended up paying another one of the bills or something at the end and at the beginning of the other year. Does that make sense? So we had extra bills because of the way it fell, like because it had to be paid on the first, so that went into the next year, even though it was supposed to be the last one or the first one. I can show you the bills so you can see how they come, but that's why we raised that one.
But also, though, then just to reiterate what you said, that one's almost done. What, do we have one more payment or something for that one?
Which one are you talking
For
about?
insurance?
Insurance? Yes, I believe we have one more payment for that. Mhm.
Yeah.
Yeah, because this is,
Let me ask this
yes, we
question.
should have 3. Yes, we have 3 by now, so we should have one more yet.
So when you put the budget into Peachtree, right, do you just take the yearly number and divide it by 12 and put it in?
Yeah.
Okay.
Mhm.
And so.
It does it automatically. That's to tell you the truth, Dean, that's the easiest way to do it in there.
No, and that's fine. All I was headed to is, that's the easiest way to do it. If you went in and time phased it and you did hey, here's April year to budget, a lot of those things that look like they're overspent would just.
It would show up more. You'd be able to see that.
But it's an awful lot of work for probably not a whole lot of benefit.
Yeah.
The best thing to do would be, here's a list of these GLAs that are upfront loaded, and in the template or whatever, you could just highlight them and say, look, all these are.
I think we did start doing that, right, Christy? On the actual budget thing, we were putting notes
I think
Yeah.
we did
in the
when we
end
did
there for
budget,
some of
we-
these. So some of those are listed, I believe, on there. We did some of that already.
Yeah.
It just wasn't in this thing that came.
Yeah,
No.
it just wasn't showing up in this. That's why we tried to make some notes here to tell you guys
Yeah,
certain
we
things.
went and did that backward.
The classic what tends to happen.
Right. Yep. So, okay, does anyone else have anything else on that?
No.
All right, very good. Is there any other topics, brief topics or anything that you need to talk about, or are we good?
None for me.
Oh, I'm good.
Okay. All right, well then, I have nothing else for you. Also, you may take the floor again, Chairman
Well,
Naylor.
thank you. I guess we'll go to supervisor comments. Any?
None for me.
Just had a question, you had mentioned the cameras, people watching television,
Yep.
purchasing here, what was your fault?
I fixed it.
She fixed it.
Oh,
Me and Shane moved the camera, so now it will only get like a triangle worth of this desk
Yeah.
right here, but then it still hits that podium, which I think was the
I
point.
watched it, I'm trying to figure out what you were getting at.
Well, there was at least 4 times that I caught while watching in the background, where first it zoomed in on Layman, he was down there. Then it zoomed in with the 2 mics,
Right.
and that you could really see, if I were to pause it, I could have read everything. So the concern is that sometimes
That's what I
there's
was
some
thinking.
confidential information, much the reason we took it off from
Right.
behind us.
Okay.
Yep, we're good. We should be good now. Yeah,
That's all.
Go back and watch this one.
go for it.
Hopefully Shane was down there, doing jiggle to see.
The only
You
comment-
shouldn't see me no more, so.
Nope.
The only comment I have is good work, staff, on this. This is very beneficial for us. And I think the state of the township financially is good right now. And knock on wood.
Yes.
So if there's nothing else, I make a motion we adjourn.
Second.
All those in favor?
Aye.
Meeting adjourned. Thank you very much.